All right, welcome to episode 2 of Behind the Headlines. That's right, we survived one episode and did not get canceled. Michael, what are you going to learn today if you watch this episode? Well, um, you're going to learn a few things. I can tell you last week we gave away two stocks, TOST and SOUN. We'll get into those. Those made a lot of people money if you actually followed those. I'm not a financial advisor. I'm just a trader, and I'm giving you some of my own advice, some of my own picks, that is. So you'll learn that. You'll hear about some headlines, and we're going to dive into some charts behind the headlines. And then I'm going to give you two more stocks to watch. Maybe we can do it again this week, but please stick around. Don't forget to subscribe, like, share, hit the notification button, whatever you got to do, because we got some good stuff here. I'm joined with Michael Noss up in the Great White North.
Yes, still great and white. But yeah, the first episode was hugely well received. So again, we appreciate all the interactions, the algorithms and everything. Love that. So please keep that going. And those trades, I we got some messages right off the bat. I know we got some emails and everything. It's not exactly what we're planning on doing here, but we're just two traders talking the shit. So every now and then there is going to be some stocks that are talked about and that we can make action on, and if they work, they work. So I have not been as active in the doc, adding everything there that this week that you were, Steve. So why don't you, while I bring this up, talk about people? We have a kind of a theme this week, right? When we're going through the news. So I guess I should just stop and preface the idea behind this podcast, because we're only on episode 2 and we're probably going to get a lot of new people, is that there are tons of podcasts and tons of financial media and everything out there that talk about the headlines and say, hey, this is the thing that happened because of the headlines. Uh, but then they stop there, right? This is the headline, this is what happened. We as traders don't really care too much about the headline. We care about what we can take action on with the stock itself or with the overall market or whatever security it is. So that's why we called it. We're going to go beyond the headlines and we're going to look at charts. We're going to say, okay, what do we think that this particular headline could mean for the stock or this industry or even the market as a whole? And, where's the trade? Where can we take action on? So let's actually pop up. I'm going to bring up the first headline here, Steve, and you can tell people what they're in for today.
Headline, you haven't noticed, I'm representing Generation X, early Gen X, and my generation really, we can be cynical. We don't really, try to put gloss and things. And I just want to preface by saying, one of the reasons we do this, there's headlines, there's also analysts. God, I hate analysts. They're the most useless creatures on the face of the earth.
Absolutely.
If you're an analyst, I'm sorry. AI is going to replace you, by the way. Um, I also don't care for people who get on CNBC and talk their book. They're usually long what they're already talking about. And that brings me to another subject. They're usually long, but they're trying to bring in the retail masses. And what we had this week in the headlines was something that is a big lesson to new traders. And that is buy the rumor, sell the news is one axiom.
Hmm.
You've got to understand that insiders, whether it be Nancy Pelosi or the actual CEO of a company, know what's coming up over the horizon. They can see the smoke, they can see the fire. And we had some interesting headlines in terms of big names this week. Jeff Bezos, Jamie Dimon, Zuckerberg. Let me just stop on Jamie Dimon for a minute. Apparently, this is the very first time he has ever sold stock in his company. That's
Wow.
a big flag. So, and by the way, since this was reported, it's already been done. So they're already out of their position. It's
Yeah.
not like they're going to start selling. So, which brings up the other point. Some of these families, like the WalMarts, the Waltons, they moved over $1.5 billion worth of stock out of their family, and you don't just do that in a day trade with a parsed up algo order. It takes weeks, maybe even months. And if you're going to do it, you better do it when the herd is moving towards you. So I get back to the analysts with the upgrades and the people talking their book. And, retail is always the last group to be the bag holder. And CNBC is certainly guilty of amplifying that. But you've got to be extremely careful. If you're out there reading these headlines right now thinking, oh my gosh, the market is at all time highs, I'm missing out. Well, the smart people, the smart money, insider money, they've already made their money. They're not missing out. They're hoping that you're going to chase the market and come in and help them exit, their giant exit strategy. So what we can do, is we can look at a couple of these charts. I'm not going to be surprised at what we see, but I think the major takeaway is, especially Jamie Dimon, he was very smart at buying a lot of insider stock back in 2008, pretty much the low.
Hmm.
And apparently, you've got to just focus on these words. This is the first time ever he has sold his insider shares. What does that tell you? Is he seeing something? Well, certainly he got some great prices. Markets certainly been helping these people out. So you've got to look at these families, these funds, these giant CEOs when they take a big exit. They're like a giant oil tanker. They have got to point their oil tanker in one direction and just kind of move it through the locks until they're out. So what does that tell us? I'd like to bring up something if we could. Can we look at maybe either the S&P? Let's look at the S&P with some technical analysis here,
Sure.
because that's what we want to do, right? We want to start looking under the headlines. And yes, we have a giant uptrending market, but what if you add RSI, Mr. Noss? Do you
Uh,
think we would see some what we call bearish divergence? It might be more prevalent on the daily. It might be more prevalent on the weekly. I don't know. We can take a look. But
let's take a
you
punt
know,
here, and I'm sure we're gonna see that. Now, there's one thing I did want to highlight that you mentioned that I think is important for a lot of people who don't understand how these things report. Is that yes, as soon as you see it, they've been working that order for a long period of time, and they're working that order to the point that they may be done completely, they may not, who knows? But a lot of people think that this is something that they can immediately take action on, but again, they're done and they don't need to report until they're complete entirely. And then they're supposed to report immediately after, but we all know that that's something that takes sometimes a little bit of liberty. Maybe they're going to be a little bit, more, they'll start selling the order and maybe they sell the first billion right away and they're going to wait till that last 100 million is gone before they actually report it. But yeah, by the time you see a lot of this is done. So here is the SPY, and yeah, you can see it right here. So the RSI divergence essentially is just RSI is a
mhm.
momentum indicator, and when you start to see it move lower as price moves higher, sometimes that can be a sign of, okay, this last move in the market required way less momentum, way less fervor behind it when it came to buying as the moves before it. And I always preface these things go on for a long period of time. Technically, we've been seeing an RSI divergence since, way back here. And you wouldn't want to have just dumped your shares there. You would have missed this entire move. But it is, in my opinion, like a flashing yellow warning sign. Not red to say, hey, you got to be scared. But it's that yellow warning sign of, okay, it looks like the buyers may be running out of steam. And I always was taught when I was taking my CMT about the divergence is that when you're seeing an RSI divergence, it means the market is kind of floating up. And floating up just might mean that there's a lack of sellers. It just means that there's no, again, momentum behind it. It could also mean that every uptick is getting met with an equal downtick. So you can kind of see a lot of this stuff on the chart too if you zoom in really, really closely. So if we look at this up move right here, the amount of full body green bars that took place, this is going to cause the RSI to push higher. And then this last move up here, you can see a lot more, dojis. And as traders, we know dojis, they mean indecision. They're markets that really haven't made up their mind. They're battles between bulls and bears that are taking place. And yeah, I'm seeing that, and not only in the SPY. When I was doing a lot of my analysis last night, I saw it in a whole bunch of charts.
I love analogies or visuals, if you will. And I used to be a pilot. And when you get up in the higher altitudes, the air gets a little thinner. You have to make some adjustments. And when we get up this high and I start to see bearish divergence, and you're right, bearish divergence by itself is not an indicator to take action. It's just kind of a backdrop of knowledge to be aware of. But to me, it's like these are Sherpas. The air is getting a little thin up here. And that's, like you said, a yellow flag. The other yellow flag is the headlines. Big
Yep.
insiders taking exit strategies on things that they might see that we don't see. So we've got two reasons why you don't want to be looking at the market and hearing how much your neighbor is killing it in certain stocks and start having that FOMO, fear of missing out, develop in your chest. That's probably one of the worst emotions you can have as a trader because it's the opposite of patience. And patience is probably the most virtuous thing you can have as a trader. And fear of missing out does not bode well for that. I'm wondering. I know you've moved on a little bit to something, but I'm wondering what does the Nasdaq looks like? Can we throw the Qs up
Yeah.
there along and see if there's any more? Because I bring that up because the Nasdaq basically led us higher on that. So
Yeah, it
as
is.
far as
It's showing that same as well. It's not as pronounced as the S&P 500, but it's definitely showing. So what you want to look for if you're drawing these divergences yourself is these swing highs. So if you get a swing high right here and you kind of mark where the RSI is at that level, and then you get the high that you're at now and you mark the RSI at that level, and we are seeing that. But I did bring up Tesla, and that was to kind of affirm your point, Steve, of this is the last big insider sell that I can think of on Tesla, and this was Elon. You remember he did that stupid tweet to give himself an excuse to sell of, I'm going to sell a bunch of shares depending on the polls of this tweet. But like you had mentioned, he was already selling before then, right? And that caused a Tesla from $400 all the way down to $100. This was that move during when he was buying Twitter and everything was going wild there. So you're right. You want to stay away from there's the old saying, don't fight the Fed, but I think it's even more important, don't fight the insiders in whatever stock you're trading. If the either the company is diluting shareholders by issuing more shares, which we saw a lot in kind of the meme stock era, and you see a lot in when you have these biotechs and smaller companies just popping out of nowhere. You see quite often that the company itself says, my price is really good right now. I should sell some shares to raise a bunch of capital because I believe as a company, in the long run, I can return more money on that capital. It can help my company pay off debt or something. Not saying that it's a malicious thing, but just if they're doing it, if the company is selling shares or big people with a lot of information are selling shares, then I think that's something you definitely have to watch out for. And the opposite can be true, right? You mentioned in 2008, I think when we were talking offline there, that Jamie Dimon had bought some shares. So he was looking at JP Morgan. He was saying, well, I know the whole market is throwing out any financial stock that exists, and I know my company, and I think my company will be fine. And he's putting money into it. And for me, that's when I get really excited because if you're buying your own company stock, that is after tax earning revenue that you've paid the government on the taxes of, and you've decided with that money, as opposed to buying a new house or going on a fancy trip, or in these guys' cases, buying a yacht or a politician or whatever it is you can buy with $1 billion this day. You're taking that money and you're putting back into your company. To me, that's a really interesting vote of confidence that they're kind of trading just like we are. So yeah, definitely something to pay attention to in the long run, these insider buys and these insider sells, and then how they affect the overall price of whatever it is you're trading.
you have to remember that this thing called the stock market is a predictive indicator. It's usually 6 months forward
Hmm.
looking, and in this case, that would be a reason to not want to chase the market when you look at the insider selling at all-time highs, and a couple of little technical things that Michael and I have showed you that again might suggest we're in thin air up here and maybe due for a healthy pullback. It's those things can come like a thief in the night. You got to be careful. The elevator comes down a lot faster than the stair steps of the green candles go up that Michael was talking about. But
Well, and
I think that's really go ahead.
I just wanted to highlight because you said healthy, and I think a lot of people they think when we're saying okay, maybe we're running out of steam, that we're going to think that hey, it's 1987 all over again or 2020. But if you are a participant in the market, you want healthy pullbacks. You want people to take profits and then allocate those profits to different securities, and you want this rotation to happen. The most unhealthy thing a market can do is just go up day after day after day after day, because then you get these margin flushes and this crazy activity that occurs. If we're going to see a pullback here, and that's going to happen over the next few weeks, again, for me, that's a healthy pullback. I want to be prepared for it. I want to have less some cash on the side and look for things to buy, maybe a short here or there. But yeah, again, healthy pullback. I just want to make sure that people know that we're not saying, hey, the end of the world is coming and you have to worry about it. But if we should and we should hope for to experience some pullbacks in the market.
The market is a living, breathing entity. Breathing is the term. So I like to say the market has to take a breath. It can't just go, it's not healthy for anybody. So we need pullbacks. They're healthy. The market has to breathe. The trick is being on top of the timing. And that's what I saw a wonderful quote. Fundamentals tell you what stocks to buy, but technicals tell you when to buy it.
Hmm.
All right. On that note, I think, just to encapsulate and summarize, the headlines this week, by far, big insider selling. Just keep that in the back of your mind. Don't feel like you're missing out just because the price action is at all-time highs. The market is forward-looking. Let's go back and take a look at the couple charts that I was looking at last week. If you want to hit my desktop, I'm ready to show over here.
There we go.
If you guys recall, I mentioned I really just was salivating, and I was long into the weekend. This little bushel, or this bunch, if you will, of bottom tailing wicks that were just setting up under four. And sure enough, the market opened Monday and traded for about 45 minutes with nothing, and then it just took off. And I know I talked a lot about my favorite moving average, the 10 SMA, but I said at the time, I think it was just waiting for this moving average to come up and force the issue. Sure did. I mean, I wish I get lucky like that all the time. Please
Mm.
don't anticipate my calls doing this every time, because that was a wonderful stroke of episode one luck. I also mentioned, and by the way, if you're not part of the trade of the week, we have a trade of the week where we are at Trade Ideas, and every week I come up with a curated idea. I'll make a video on Mondays as well. You'll see it on our channel. It's called the Trade of the Week. And I mentioned TOST, what I loved about it at the time. We had earnings, and I said, never be the person chasing this big earnings gap up, right? We just talked about FOMO. FOMO doesn't get you anywhere,
Hmm.
but waiting for the technicals to tell you when to get into a good stock was right there. So the trade of the week was called down here, right at the pullback, the gap fill, the 10 SMA, and as we speak in the moment, you should be happy if you bought that. Now, I want to just preface by saying you want to take some off. This is a prior high. And as we come down, and if we get a good position and we start moving in our direction quickly, the minute we start taking out prior highs, I would like to be one who sells half. And I do that all the time. So I'll sell a half on the breakout and then see what the other half can do to work. But what I'm starting to notice is we're getting a lot of space here in between the 10 SMA and the current price action. That's when I like to pay myself and take profits off the table. I like to surf the market, put the money back in the coffer, and look for the next one. Speaking of looking for
Well,
the next one,
before you get to that, I think this actually ties in perfectly with what we were talking about with the insider buys, right? They're not you're not seeing these insiders sell during 2021, 2022 when their stock prices were depressed. They're selling as things move higher. And Steve was just saying, as a trader, we do the exact same thing, right? We're not selling, unless it's a stop loss, which is different from what they would do. We're not selling as the thing's tanking. We're waiting for it to push up and we're grabbing because we know we have the ability to get that extended price. So it's a good tie back to say, hey, what they're doing on a giant scale is the same thing that we're doing. We can just be a little bit faster, well, a lot faster, and more nimble with our trades when we're seeing that. But the same theme, right? You want to not get greedy and be the guy who's buying, because there's somebody out there. I'm looking at that toast chart right now that's up 7 days in a row, and a massive percentage gain. There's somebody out there who's buying that right now, where we mentioned this is the time that you want to be selling. Or if you really like toast and you didn't get it and you're not in, you don't have anything to sell, you just got to walk away. You got to find something else. You don't want to be the guy buying a stock up 6, 7 days in a row like that, right? Wait for it to pull back, wait for it to rest for a period of time, because not only are you buying something overextended, but where do you put your stop in a place that makes sense, right? Where Steve was talking about before, down at that low, there's a really logical place for a stop. If it cleared that level, you're out. Now when it's up here, you're guessing at this point. So yeah, I just very interesting to see, giant billionaires doing it on one scale and then, retail traders and investors doing it on the other, but following the same principle.
If you're going to be successful in trading, if you're going to chase the herd, if you're going to chase six green candles, you're going to lose money because it's just a matter of time before that reversion to the mean grabs you, catches you by surprise, and you hit the sell button for a quick loss. So, um, with that said, I've got two ideas this week going into the week, and they're both AI related, and they both look kind of similar to that SOUN, which also was an AI stock last week. So, the first of the two is BBAI. And you might notice as we're speaking here, we're getting that same kind of look, right? A big kind of a breakaway, and we're just kind of waiting up here in this holding pattern for what's coming up underneath. So I'm not going to give any entries. I'm not going to give any prices, any stops. I'm just saying put BBAI on your radar. It's an AI stock. And by the way, when these small caps get going, and then you put the catalyst on top of it, like people are reading now left and right about Chat GPT, generative pre-trained transformer language. People are learning about this every day and realizing what are the stocks? How can I get in on this? Well,
Mhm.
I think we might be starting to see that based on the technicals. What do I mean? Based on the volume, based on the breakouts, based on the volatility, the daily ranges. So BBAI is one, and CXAI
Before
is kind
just
of a
1 second, go back to
sure.
BBAI. You forgot to mention. Look at that short float.
Oh yes, of
twenty
course,
percent.
yes,
So one
yeah.
fifth
This
of every share that exists is out there to borrow, and it's just almost doubled off its lows. So that means most people uh, who are short, if not all of them, are down an incredible amount of money. So yeah, that might be a moment where you have this whole run for the exit that can cause a lot of these short squeezes that we're seeing.
Let me just flip to my 15-minute here real quick and also show you the internals. This is my 15-minute. I've got the same moving averages in there for the most part, but it's still, staying handily above its moving averages on the 15 minutes. So it's doing that same thing that SOUN did last week. It's just
Mhm.
back and forth holding pattern, but by the end of the day, those lows are bought and reversed right back up and traded near the highs. So before we take off, the last one, and for those of you that stuck around for all these, thank you for the comments. Please like and share and subscribe. Again, AI stocks, CXAI, coming out of a long, protracted base, he tried to say big volume spike the other day. So all of a sudden, these small cap AI are on people's radar. And I've been around long enough to know that when small cap theme stocks start popping like popcorn, pay attention. You don't need to look at much else. So I think the theme for next week, Michael, is the AI stocks. CXAI and BBAI are my two calls. No specific entry, just don't lose sight of them.
Yeah, I agree. As soon as there's these moments that these themes pop up, and as traders, it's our job to take advantage of the moment and then know when the moment's over. And again, going back to meme stocks was one. There was a time where you would just look at Wall Street bets and say, okay, they're talking about BlackBerry today, and you'd look at the chart, and if it was breaking out, you could just take it, and that was kind of easy money. They kept hopping from stock to stock to stock, and then they stopped working, and then now it's time to move on. And you don't get themes like this all of the time. It's not like it was instantly from meme stocks to AI. It's you get sometimes months or years between these periods of time. And I remember, because I was trading a lot in 2008 at the prop firm, it was you take any financial company that's hitting new lows and you short into those lows, and that was a great trade for a long time. So yeah, I totally agree, Steve, that you have to take these moments when they come, because you don't know how long they're going to be. Again, that doesn't mean that you get FOMO'd into all these trades. It just means always have a watch list. Focus that watch list on the theme of the day. Wait for your moment. Take your shot, take your exit if you're wrong, and then have a plan to move on. So you're not the guy on Twitter 2 or 3 years later talking about these stocks, trying to talk them back up. You took your money, you moved on, and now I don't know, VR or whatever the next thing is up there.
Let me just end with this. I've been aware of CXAI, BBAI, AI, IONQ, blah, 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 SOUN for a few months now. And that's my problem. I'm usually early to the story, but I've learned you have to wait until the chart confirms the story. And I think what we just saw here is a shot across the bow in the last, 7 days in the AI world that these stocks might be coming. So it's up to you to learn the names. You heard me just rattle off five or six off the top of my head. I've known about these for months, but you've got to know who the players are. And when the game is on and you feel the starting gun go and you see them all go, you got to disassociate yourself from all the other stuff you do and just focus on that one niche because it'll work, like Michael said, until it stops working because
Yeah.
eventually it will.
And, that's a great time to plug Trade Ideas, which is, this show is brought to you by, where you can do things just like that. You can create lists of stocks when you're out there researching. And like, Steve's got above here, you could just have a heat map like this that just shows you all the AI stocks that are up or down the day. And then even further above that, we've got our stock race, and that will tell you when these things are moving. This is a very common thing that our traders will do is they build their own list and they say, okay, I know that the AI stuff's hot right now. Let me put it all into a list and then let me just, keep that on the corner of my screen while I'm doing whatever else I do in my normal life and wait till I start to see the momentum and then start to get in, right? And I think that's the moment because you're right. If you're in too early, you showed that really long base in CXAI that would have not really cost you any money, but it would have been insanely frustrating as this thing was just basing for months and months. So, right, get yourself try Trade Ideas. The link will be in the description below. Get yourself some service that will tell you now is the time to take a look so that you can spend your time doing the things that are important as a trader, like research and journaling, and you're not spending every waking moment staring at all of these thumbnail charts for 6 months waiting for something to go. So I think that was great. And do you have any more parting? Do you have any more parting thoughts, Steve? I think we covered a lot. I think there was a lot of good education there. I think there's a lot of good ideas for people to watch in the next week. Yeah. So you have anything to leave the folks with?
Anybody who's still watching, thank you. If you want us to look at a chart, put it in the
Yes.
comments below, and we will happily look at the charts the following week. As I said, we will give you the unvarnished, unabashed truth,
Mhm.
regardless of what you want to hear.
Yeah, and me and Steve are reading all the comments. So wherever you're seeing this down below as they come through, we're sending them back and forth in the company Slack. So any suggestions, any charts you want to look at, be as nice as you can as an anonymous person in a YouTube chat, and yeah, we'll get back to you, and maybe we'll see your example on the show. So thank you all for tuning in. We'll see you all next week at around the same time on the same channel. So again, make sure you're subscribed so you don't miss it.